Your money is being stolen. I'm going to tell you why and how it's being stolen. I'm even going to tell you who's doing it. And then I'm going to tell you exactly what you can do about it. So I do this show every Friday. I've been doing it since February. I'm not a financial advisor. This isn't financial advice. That's my disclaimer. I started this in February, doing it every Friday for a purpose. And the purpose was to show over time, if you watch this, to try to convince people of what's happening and how to fix it. On my channel, I like to go over how to help you get out of debt, but also when you're saving money, how to make sure that it grows and you maintain your wealth and you don't lose money to things like inflation. Let's say that you've got some money, US dollars if you're in the US or whatever country you're in, however it's denominated, and you want that to maintain its purchasing power. And you don't want to lose the money. So you might say to yourself, well, I know how to do that. It's simple. I take my money and I put it in the bank. It's not lost. Yes, if you take $100 and you put it in the bank, 10 years from now, you still have $100. But look around. What's going to happen 10 years from now? If you could go buy a particular item for $100, do you think 10 years from now you're going to be able to buy that same item? No. Why? Because of inflation. So I'm going to show you that there's one thing you can hold on to. And if you look at this chart, it goes down in value. Now this is different for everyone's currency, and typically the US dollar, when it comes to currency over time, has been the strongest in terms of holding its value. In 100 years, 120 years from 1900 till now, this chart shows that $100 ended up being worth $3. That was the purchasing power. And it's worse than that because this only goes to 2020. So this is a chart where you're holding on to something and it's going down in value. I'm about to show you what I show every Friday, where you can put that money so that all the charts are going this way over time. In other words, everything you have is increasing in value. That's the goal. And by the way, that's what the rich do. This article shows, you can see here, you say, well, that's 120 years. I'm not even going to be alive 120 years. What do I care? Well, you might want to give it to your family and whatnot. And do you want to give them this much when you saved this much? No, you want to give them more than what you saved. Here's how bad it really is. This article, it's a great site, Seeking Alpha, says the dollar has declined 40% in the last 25 years. Most of you watching this are older than 25 years. 40%, it lost half its value from 25 years ago. So if you've been saving money, it's gone down by half. So yeah, you might be getting interest, but it's getting eaten away. And this is even worse. Since 1970, it's lost 80% of its value. That is unbelievable. So that's 50 years it lost 80%. We showed this chart and said it's 120 years, and you're like, yeah, 120 years, that's a long time, I don't care. Just 50 years lost 80% of its value. Okay, so what can you do? So first off, I look at this and I say, savings, this is what we compare. I compare these every week to show over time how it's been going. Savings, 0.43. I look at a 3-month. In other words, this is the equivalent of just holding on to cash or putting it into a CD or putting it to a treasury, a government bond. So 0.43, 1.52, 4.64 for the treasury yield for a 3-month. As you can see from this chart, it's been basically the same since February. It hasn't really changed. You're not getting a large return. Real quick, let's flip over to inflation. This is October. I'm doing this. This is December 6th. This has October's inflation 2.6. It went up since September, August. As you can see, you might say, it's not too bad. 3, 2. This is the last year. But if you watch my show, you'll realize I always go back and say, look what happened in 21, in 22, and 23. We had way above 5%. This is the sticky inflation that hasn't gone away. This is why cars went up and they haven't been coming down. Food went up and it hasn't been coming down. Because in order for this to go away, these numbers have to come down significantly. So inflation's a problem. Not only that, but you'll hear many people talk about the fact that there's different ways to look at inflation. Some of these numbers are good, some aren't. Look around. We have inflation, and that is the reason why you see your dollar going down in value, because inflation means it's not worth as much. Where does inflation come from? Who's the culprit? Who is stealing your money? Well, the government keeps going into debt. And when they go into debt, they go ahead and essentially, long story short, they're not actually printing money, but they're putting more money into circulation. More money into circulation, prices go up. What is pricing going up? That's inflation. The government goes into debt, puts more money in circulation, steals your money. That's why it's always going down. What can you do? What do the rich do? Okay. So we looked at the fact that if you just stick it in a bank, you're not going to even beat inflation. What's the point? So what can you do? Well, study after study have shown that the wealthy that maintain their wealth over time put their dollars into other things, things that go up over time. You know housing goes up over time. Look at a chart. That's real estate. The stock market goes up over time. Sure, it's cyclical. It has its downs. It has its up. But over time, it goes up. I'm going to show you these charts. Now we've got cryptocurrency. So you've got these alternatives, commodities, gold, silver. So I just threw all of these basic things on there and said, let's take a look at them all. First, let's take a look at gold and silver. I use this one particular site because they have 4 things on here I like to look at. Gold is at 26.52. You can see it's way up since February. Silver, 31.38, way up since February. Bitcoin, it's almost $100,000, way up since February. Ethereum, which when I look at cryptocurrency, I have a whole, you'll see a link down below, a whole channel where all I discuss is crypto. But these are the 2 biggest by market cap, Bitcoin and Ethereum. And they're the two most widely talked about. And Ethereum's way up since February. Okay, why do I point these things out? You might think, well, that's really hard. I'm going to show you a real easy way to invest in all of these things. Gold, silver, Bitcoin, Ethereum. Now let's look at the stock market. As you may know, you can go pick individual stocks, but studies have shown that over time it's best to, or I shouldn't say best, but you can invest in indexes like the S&P 500, which we'll talk about in a second, but this is the Dow Jones 30. People look at this when they say the stock market's going up or down, it's a bucket of 30 stocks. And over time, now you can see, here's a huge dip, here's a huge dip, here's a huge dip, here's a huge dip, here's a huge dip. What does that tell you? It tells you you don't put money in the stock market that you think you're going to need 3 months from now or 6 months from now because you don't want to sell it if there's a big dip. And you don't know when the big dips are coming. But over time, look what it's done. This is the last year. It went from 36,000 to 44,000. All right, that's a 24% increase. So if you had $1 in the bank, inflation made it worth, let's say, 97 cents over the last year. Whereas if you put it in an index, a fund that tracks the Dow 30, you would have $1.25 minus inflation. S&P 500, that's 500 stocks, which is very popular. Books have been written about it, and they talk about the fact that over time, even financial planners and those who manage money can't consistently beat the returns of the S&P 500. Over the last year, went from 4,500 all the way to over 6,000. That's a 33%. Your dollar would be $1.33. Okay, now you're probably thinking, okay, this is hard. We're talking gold, we're talking silver, we're talking crypto, we're talking all these index funds. How do I do that? I have a link down below to this little post that I put. Spot ETFs. So what does that mean? It means you can go on to whoever you use, Schwab, Fidelity, and you can buy what's called an ETF. And if it's an ETF for gold, silver, Bitcoin, Ethereum, it means that you just buy a share of that ETF and you're buying an equivalent amount of gold or silver or Bitcoin or Ethereum. So you don't have to learn, how do I buy crypto and how do I get a wallet and how do I purchase it? Of course, there's differences in the way in which you're holding the asset. You're not holding the asset, the ETF is. But anyway, if it goes up, it goes down, you're going to make money proportionally. And then same thing with gold and silver. You don't have to go buy a bar of gold if you don't want to. You can simply use these ETFs. I put out videos on the differences between having the physical thing versus going out and just getting it through an ETF. But it's a quick, easy way. You can just go on. I want $100 of gold ETF, $100 of the silver ETF, $100 of Bitcoin, $100 of Ethereum, and now I'm diversified into those 4 things. Now, you can also, there are all sorts of ETFs for things like real estate and stuff like that, but it's not as hard as you might think to quickly invest in these things. Then you can buy an index fund for the Dow Jones and an index fund for the S&P 500. There you go. Within Schwab or Fidelity, you're now diversified across these 6 items, and you didn't have to go pick individual stocks or anything like that. Again, not financial advice, just showing you it's not as hard as you think. Now, what did we just do if we took $1,000 and converted it into these things. Well, think about that. When you log into Fidelity, it's going to say your dollar value. But remember, you don't have dollars. What it means is if you sold all of your assets right now, it would be worth that much dollars. That's what you would get. So you've converted your dollars into something that is going, as you see all these charts, over time up and to the right, as opposed to the dollar, which is just going down. And then when you want, you convert it back to dollars and you use it. I have many videos on make sure you have an emergency fund and that sort of thing. And of course, you need the dollars, but I think of US dollars as transactional. That's why to me they're dead. I don't hold them. I don't want to hold them. I only have enough that I need for right now or emergency fund. And I let it sit in things like this until I need to take it out, turn it into dollars, and use it. Because again, I don't want my dollar to be worth 80 cents. I want it to be worth $1.30, $1.50, $2. That's why you invest in these alternatives. All right, now let's talk just generally about things to look at when it comes to the economy. I always look at the 2-year Treasury note. There it is, 4.09. And the 10-year Treasury note, 4.15. Why? 2 reasons. These are often looked at as barometers for the economy. The 10-year Treasury correlates, or I should say the 30-year mortgage correlates very well to the 10-year Treasury. So people like to watch that to get an idea of where the mortgage rates are going. But more importantly, the 2-year and the 10-year typically show how the economy is doing, whether or not we might be going into recession or out of one, you name it, whether or not they're inverted. The basic rule is this. If you put money into something for 10 years, you would expect to get a higher interest rate than if you put money into something for 2 years. So if the 10-year is paying less, that's usually not a good sign. Right now it's paying more. And you can see over time when it's below this black line, that means the 10-year is paying less than the 2-year. It's called inverted. Why do we care? Now you can see it was inverted from 2022 all the way to not that long ago in August of 24. It's just recently come out of it. Why do we look at that? Well, if we go over time, all these gray areas are when the economy was not doing well. You remember the 2008, what they call the GFC, .com bubble, things like that. What do you notice about each one of these gray areas? Well, it was inverted right before. 6 months before or so, inverted right before, inverted right before, inverted right before, and oh look, recently it was inverted. Does that necessarily mean we're going to have bad economic times? I don't know. Something to watch. It has in the past. Then we look at the inflation rate, as I showed you, not good, hasn't been going away. And then the unemployment rate. Now this is unemployment from 1950s till now. You can see it's been all over the map. If we scroll in here, you can see that recently, this was 2014-15, it was going down is good. But real recently, 2024, we had that spike because of something we all know. But here you go. It was down in 22, 23, 3.4. Now it's up to 4.2. The difference between 3.4 and 4.2 doesn't sound like much, but in terms of jobs, it's a lot. Now, most people will say, I don't care about the unemployment rate unless it affects me and I'm unemployed. So it going up is not a good sign. It's increasing the chances that you or a loved one may become unemployed. Make sure you have your emergency fund and that sort of thing. It also is a barometer as to how the economy is doing. If unemployment's going up, that's not good. So there you have it. Please take a look at everything you see in this chart from back in February till now. Of course, that's just a year. But you saw all the charts I showed you that over 5 years, 10 years, a long period of time. Actually, let's look at the Dow Jones here. What's the max it goes to? It goes back to 1984. And you can see it's just up and to the right with a lot of downtimes, so be careful. That's why I diversify. I take the dollars, put my emergency fund in dollars. I take what I don't need right now to pay my bills, and I put it into things. I'm dollar cost averaging over time. Gold, silver, stocks through indexes. I also buy some individual stocks personally, crypto, that sort of thing. And you can do it all through ETFs because that's what wealthy people do. Their long-term wealth, they have it in things that go up in value. If you had been holding real estate or lots of it recently, wow, or stocks or anything, doesn't mean we're not going to have a downturn. It just means that over time, it's best to have assets, not currency. Thank you for watching. I really hope this is helpful. I just want to try to open people's eyes because this sort of information doesn't seem to be talked about a lot. And it's something that I think you really need to know. Have a great day. Thanks for watching.